Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, July 25th, 2013. The candle that we're analysing here is this second last candle on the chart. That final candle that we can see there is currently developing and is quite important. We will look at that, how it's developing in a minute. But looking at this candle that has finalised trading, we have finally seen a change of trend in this market for quite a substantial period of time. All through this very strong swing in this congestion area, we haven't seen the trend change. With the previous day's trading, we had a bearish engulfing pattern, and it did suggest a good opportunity for a change of trend. A very large black body candle with the sellers finding some solid downside momentum, and today confirmation of that change of trend with the current candle making a lower high and a lower low. Unfortunately, this downtrend is not supported by the sellers. We have a white body candle denoting the buyers making net bullish progress as opposed to the large amount of net bearish progress that the sellers made for the previous day's trading. So sentiment has changed quite dramatically in this market. We've also seen the buyers close up towards the high at the close of trading, and we've also seen the sellers lose commitment as the market tested down below the previous low and to the 1309 level that was previous resistance and is now acting as support. So the sellers lost commitment down there. The buyers came back into the market strongly and closed the market up above the 1329 level of potential resistance. With the bullish breakout up above there, this does suggest that this downtrend certainly has potential to have ended. And if we look at this current candle, how it's developing, we are now trading up above the high with a higher high and a higher low, and it does suggest there is good potential for this trend to change back to the upside, and we are seeing a white body candle at the moment. The only problem here is that the market is interacting with the bottom of the cloud, and that's where the market is trading right now. So we could see some price rejection coming back into this market. We could see the buyers lose commitment up around that level. The problem here for us is that following this very strong rally that we saw in the market is now bound by very strong resistance overhead from the bottom of the cloud, extending up through the 1400 round number level and extending up to around 1432. We also have very solid support down below, and immediately below where the market's currently trading at 1329, down to 1309 where the market traded to today to its low, and then down to the round number 1300 that in the immediate past was strong resistance to this market. So a market that isn't really conducive to taking any solid positions. I suggest that if we do see a strong bearish close down below 1300, we could see this market sell off quite dramatically, and that would be in line with the market trading down below the cloud and the overall trend being potentially bearish. Now, just looking at the Fibonacci extension, and now that this market is in a new first time frame downtrend, we're looking at the relationship of this first time frame downtrend to the previous time the market was trending down, and here we saw the market testing down below the important 50% level and the 61.8% level, being rejected from the 61.8% level in a bullish way, failing to close down below those levels, and this is suggesting that there is good potential for a change of trend back to the upside. In terms of the Fibonacci retracement of this prior uptrend, and here we've seen the market testing down below the 23.6% level and being rejected from there. It's not a major level, it's not as important a level as the 38.2, 50 and 61.8%, but it still is an important level. And with this solid upside price rejection and the sellers failing to support the trend to the downside, it does suggest good potential for a change of trend. Now, in terms of Ichimoku, obviously a bearish market in that long-term time frame with the market trading down below the cloud. So, as I've mentioned, the market is now interacting with the cloud, and that has potential to act as very, very solid resistance to this market, and maybe a very, very strong barrier to this market continuing with this potential change of trend to the upside. So we do need to be aware of that even though all factors are pointing to the potential change of trend with this strong resistance overhead, we can't be sure of that occurring. By the same token, with the very, very solid support down below, it does suggest that this market may not move freely down to this 1300 level or below. So we have a market that's bound between strong resistance and strong support. For today's trading, we also saw the market find support at the Tenkan Sen, and that was around that 1309 level, strengthening that area. and that will be a very solid area for us moving forward. So 1309 will be even stronger support for this market. The market is still trading up above both the Kijun Sen and Tenkan Sen, as we've seen for the previous couple of trading days, and it suggests that we have a bullish market in the medium and fast term timeframes. And if we look here at the Chica span, that's within the corresponding price action, so it's not confirming nor denying what we're seeing in any of the time frames. So we have a market that's giving us some very, very mixed signals. So a slightly bearish market in the long-term time frame, bullish in the medium and fast term time frames. So a lot of indecision in this market at the moment. We really do need for this market to make its mind up in either direction. Now, as we move further into the trading week, the market, if we do trade sideways, the market will be interacting with the thin part of the cloud. So there is a possibility of the market breaking out above the cloud in the next week or so. So let's be aware of that there is potential for this to turn into a bullish market in all three time frames. Now, this is really dependent on whether we can see a bearish close down below the 1300 level, and if we do see that, we could see the market testing down to 1266 or even down to around the 1250 level quite quickly. But we do need to be patient over the next few trading days and wait for this market that is now consolidating, give us some resolution to the strong resistance overhead and the strong support down below.